Hello, and you are all very welcome to GoldCore's webinar, Everything You Need to Know About Silver in 60 Minutes. At last count we had over 700 registered to attend, so there is certainly an appetite for information on investing in silver. As this is an open Q&A session, it is your questions that have driven the agenda. We received over 250 questions ahead of the webinar today, and one subject that keeps cropping up is that of safety of silver deposits, be they held in person or by trusted third parties. I want to bring your attention that GoldCore offer allocated accounts with all major depositories in the US, with the Perth Mint, and with Viamat. Allocated accounts stored with Viamat in the tax-free zone in Zurich Airport, Switzerland, are probably the safest place in the world to store gold and silver bullion. Bullion stored in Viamat is fully insured by Lloyd's of London. You can view the contents of your storage account at any time by visiting our website and reviewing the contents, bar numbers and location of your holdings. You can also view market estimates and performance statistics as to the value of your holdings. As you can see from the agenda, the webinar is comprised of two Q&A presentations. From the 250 or so questions that were submitted, we batched them according to several prevalent topics, and we believe we will cover most, if not all, of the major topics raised by your questions. I'm going to do a quick introduction to your panel today. My name is Michael O'Brien. I'm the Marketing and Communications Manager here at GoldCore, and I'll be your moderator today. We have two speakers. First up is David Morgan. David, a precious metals aficionado, created the silverinvestor.com website and originated the Morgan Report, a monthly that covers economic news, overall financial health of the global economy, currency problems, and the key reasons for investing in precious metals. As publisher of the Morgan Report, he has appeared on CNBC, Fox Business, and BNN in Canada. He has been interviewed by the Wall Street Journal, Futures Magazine, the Global Report, and numerous other publications. Our second speaker, Mark O'Byrne, is the Research Director and Founder at GoldCore. Mark is recognized globally as a leading analyst on the precious metals market, and his daily market updates are quoted and reported on in Dow Jones MarketWatch, Bloomberg, Wall Street Journal, Financial Times, and many others. Leading on from David, Mark will address key questions as submitted by you. I'm going to hand you now over to David, and I'm going to allocate the mouse and screen to him.
Very good. Well, welcome everyone, and this is going to be a bit of a trial for me from the aspect that, as Michael said, there were over 200 questions, and they have been categorized, taking some of them obviously were duplicates. But to cover some of these questions in depth is impossible, and because of that, and my desire to educate, I'm going to do my best to maybe do a top view on some of these. I do want to remind everyone that I'm very happy to do these from time to time for free, but there is a paid service. It's called the Morgan Report. There are 3 levels. The basic level, I answer questions, many of which are appearing here in the reports. Sometimes some of the questions actually are the feature of an editorial. And further, if you're on the advanced service, you are allowed to write me your questions, and you can expect an answer, even if the answer is I can't answer it. And those are usually direct stock questions. In other words, I'm not allowed to answer, what do you think about XYZ mining? So with that in mind, let me proceed ahead with this webinar. Silver price rises, records when to sell. When do you see $100 silver or more for silver? I'm on record in the early 2000s saying that silver would make $100 US as a minimum. When is a tougher question to answer. The truth is no one knows for sure, but it will be during the panic manic phase, and that probably is scheduled to be around 2016. Right now, again, no one knows, but most of these bull markets run an average of about 17 years. The bull market in gold started around 2000. That makes 2017. I think it'll be before that. So if you want a number, that's about it. So it's not going to be 2013, probably not 2014, but beyond that, I'll probably see those kind of numbers. When do you think silver reaches peak value, and what is the potential value silver might achieve? I think the peak value, again, probably be 2016, 17, in that range. And the potential value is not a number of US dollars, although that's certainly how everyone is taught to think. You have to shift your paradigm. What you want to focus on is what the question asks, value of silver. The value of silver is like the value of gold. Everyone is pretty much that's been looking at the metals for very long has heard the expression, and it's worn the one, but yet it gives the correct idea, that a ounce of gold would buy a fine man's suit. During Roman times, you could get togas, sandals, rope, etc., the best of the best for a gold ounce. In the 1920s, you get a men's suit, hat, tie, umbrella, shoes, socks, the whole 9 yards for an ounce of gold. Today, that's true as well. So that's the value of gold over a long period of time. Does it fluctuate? Yes. But the idea is that it maintains its value over long periods of time, and that's a marker for the value. Now, if gold gets to be priced where you could buy 25 men's suits for an ounce of gold, I would suggest you consider the fact that that means it's overvalued. You're not looking at how many dollars or how many euros or how many whatevers. You're looking at gold versus clothes. And you can apply it gold versus food or gold versus houses or gold versus the Dow Jones. Don't care. You want to look at what the value of it is. Is it overvalued or undervalued or fair value? So that's the idea, and that is where do I think it'll go. Mike Maloney and I are pretty close. I've known Mike for a long time. He's looking for a 1-to-1 ratio with the Dow Jones Industrial Average. I'm looking at something along those lines. I think that's probably a pretty accurate measurement. So that's the idea I want to give you. When do we know to sell? When we reach those kind of indicators. What indicators you look for, I just outlined those. So that should take care of the next one. I know I'm going fast, but I got a lot to cover. What price do you see reaching at its peak if it were to get a 16-to-1 or 10-to-1 ratio? I look at the ratios. So basically gold, I think, has more analysts on it than silver. If I have said go to the website, themorganreport.com, or the same website, silver-investor.com. Go to the archives, look up an article called Engineering the Price of Gold. It's one of the first ones I wrote. It's way back in the early 2000s. I talk about I expect to see 16-to-1 or even 10-to-1. So if you think gold is going to 3,000 to 3,500, which Jim Sinclair has said many, many times as a minimum for him, then a 10-to-1 ratio would imply $350 gold. If you looked at the other ratio, the monetary ratio of 16-to-1, obviously be less than that. I don't think there'll be anything but silver beating gold on a ratio basis once this bull market gets restarted. But nonetheless, I think people should own both, especially depending on their individual situation. Will silver break the sensitive level of 50 in 2013? I doubt it. From which month of 2013 will it rise? Probably this month, but no one knows for sure. We might get a false rally from current March into June, only to fall back into the months. There's so many wild cards out there. It's really, really difficult for me or anyone else to say when. Everyone wants those answers, myself included. On the advanced service, I let the market show me what it's doing, and based on what the market does, I make my trades. So, for example, if the market were to maintain a certain price level for a certain amount of time, then I would establish a position saying the market's telling me it's going higher here, and then I would put a stop in because I don't know for sure that that's going to hold, and if it does hold, then away you go. I haven't had many trades on, in fact, none this year. So let's see, I've got the next slide. Whoops. Is that the next slide, manipulation? Okay, so that slide, the next slide. When silver prices, why isn't silver rising with the stock market? Yeah, because it isn't. First of all, gold, not gold stocks, but gold is the most negatively correlated asset that exists to the stock market. So when the stock market goes up, gold goes down, and vice versa. Doesn't mean it's 100% of the time, doesn't mean it's a tick-by-tick basis. It means the most negatively correlated. Silver is 85% correlated to gold, 85%. The only thing that's 100% correlated to gold is gold. So if silver is highly correlated to gold, and it is, and gold is the most negatively correlated asset to the stock market that exists, then common sense or logic would imply that silver would pretty much follow gold, and if the stock market's going up, then gold would go down, implying that silver would as well. Can you see silver dipping again below $24 US? Possibly. I mean, I've never said that I know everything about the silver market. I think the 26 and change level will hold. I've done several updates for my paid members on that fact because they are the ones that pay me, which means they get to look at it on a tick by tick, count by count basis. I'm exaggerating slightly, but they get to sit down with me at their computer. It's my voice, and I'm going through the charts with them and show them what I expect. Just because I expect these things doesn't necessarily mean I'm correct, but I do give out illustrations on what to do or what to look for. I'm on board with the coming collapse of the dollar. I believe silver is a way to protect my family financially. But when will it be time to sell? I covered that. When the value of silver and gold get to overvalued levels, that's the time to start selling. I plan to make a call. I plan to tell my members what I'm doing, what I'm looking at putting my money into, and sell into the rally. In other words, there's not a day that I plan to sell. I plan to sell when silver starts to get overvalued. I'm going to probably start to allocate out of the metal, and probably will always hold some, but nonetheless, I don't want to hold too long or sell too quickly. That's how I will approach it. I will be approaching it as a sale, not a one-day event. If silver and gold is a real store of value, why is the price of silver still in the doldrums? This may not please you, but the function of a bull market, and you can Google this, and you can read a lot of other opinions. This is mine and some fact, but mostly it's opinion. The function of a bull market is to shake off as many people as possible. If you go back to the last bull market in gold, you would have loved to buy it at the fixed price of $42.22 an ounce. Most people say 35, but we can use 35. And $8.50 January 21st, 1980. But in that ride, it went to $200, fell back to almost $100, and then from $100 made its way up to the $8.50 or $8.75 versus the near-month futures contract. So would you have had the conviction? Well, looking backwards, you would have, because you'd know the future, but none of us do. So this is not untypical of a bull market. It happened in the last one. It's happening again. It doesn't really concern me that much because I only use leverage when I think it's applicable, and I'm smart enough to know the market knows more than any of us, and if I'm wrong in one of my calls, I get stopped out. Now, I do more than trading. I invest for the long term. That's basically what the Morgan Report's about. The basic service is all about a buy and hold philosophy. It has nothing to do with trading. It's only advanced level that I do that. And at the advanced level, I never have more than 25% on a trade, and that's not a single trade. That would be multiple trades. Most of the time, it's a small amount allocated for a leverage position that's hopefully going to carry through for a position, meaning it will last several weeks to months. But anyway, I hopefully answered that. Oops, sorry. Let's see. In his well-researched and documented book, The Great Crash, Harry Dent, I've read the book, convincingly projects 12 years of deflation, which has started and will necessarily bring down all prices of all assets, including precious metals and metal. I've read the book. In fact, I went through that in extreme depth in the Morgan Report. If you're on the advanced service, you could dig it out. I don't know which month and issue it was. It's been several years ago. The main thing to keep in mind is that, one, I'm an Austrian economist, so I really believe, and you can go to mises.org, mises.org, type in deflation in their search engine and read a bunch about deflation. There's never been a true deflation, which is a contraction in the money supply. We're increasing the money supply at an astronomical level. It's not a function of the amount of dollars printed. It's a function of how fast those dollars are turned over. So yes, we are seeing what's really called stagflation, which now I'm going to contradict my Austrian schooling, because even the really strict Austrians say you can't have what we really have, which is a very high increase in inflation in the money supply and mixed prices out there in the real world. The bottom line is this. One, there's never been a time in recorded history of 5,000 or 6,000 years that a paper system has trumped gold. Never. It never happened. Number two is the research that Jim Popova did that the only true deflations that ever took place were in a gold-backed system, not in a fiat-only system. So I would urge you to do more research. I'm not urging you to go into the archives on my paid member services and then look it up that way. There's lots of arguments out there. But certainly we are in trying times. Certainly I'd say we're in stagflation, and certainly it demands paying attention to. Supply and demand. Is there an alternative for silver for industrial use? All kinds of alternatives. For example, CD-ROMs. The really high-end ones that have to have certain performance are silver. Most of them are aluminum. Same thing with a mirror. Real high-end mirror is silver, and a low-grade crummy mirror that you might have in a kid's toy box or where the function of the mirror isn't really that important. You could have aluminum. Might there be an alternative at some point? They're already, in my view, and I could be wrong, but almost every place that silver could be squeezed out of the equation, it has been. All the alternatives have been used, all the alternatives. And so you look at like photovoltaics that have to have some silver. That's been squeezed down to the barest amount of silver possible. The reason that there can't be a substitute is that silver conducts electricity better than anything known to mankind. Silver also transfers heat at a better rate than anything else. So you have solar, you have electric conductivity, you have heat transfer, and there's also biocidal principles where silver can actually kill bacteria that no antibiotic can at this point in time. So there's properties of silver that you can't substitute for. It's like saying you've got a gold medal athlete. He's the best in the world, set a world's record, and until something else comes along, in other words, something different than silver, another element out there, it's king in some areas. It's in those areas. Do you know if central banks are buying silver like Russia and China and India? I doubt it. Knowing what the end game will be. Certainly I can't give you all the confidentiality thing even on the paid service because I have certain non-disclosure agreements that I sign with certain entities and individuals that I cannot disclose. Let me just say that to the best of my knowledge, no one in the official realm in those three countries are buying silver. I'll just state it as that. And are 1,000-ounce bars scarce? No, 1,000-ounce bars aren't necessarily scarce. There's roughly 1 billion ounces in 1,000-ounce bar form, and most of them are held by ETFs. For all practical purposes, almost all 1,000-ounce bars are now held as investment, but they're not rare relative to that's the silver supply, and then of course there's the coin supply, which is also roughly 1 billion ounces. So the total supply, silver coins and silver commercial bars, is roughly 2 billion ounces. Why no central bank demand for silver? Paul, I suggest you get on the website, go in the archives, and read everything written by Charles Savoie. That's Charles, S-A-V-O-I-E. It would take me months to go through everything, but silver has been more of a hit list item than gold, believe it or not. The entire thing about the Wizard of Oz was all about moving the gold standard, only gold, to the banking establishment in the East, depressing silver, the people's money, for more control. Gold is only one step away from a fiat system. Whenever you had a trimetallic system, copper, silver, and gold, you had a more stable system than just gold alone. That can be proven. I don't have time to go into it, but it's something for you to research. A lot of these things, you'll get your best answer when you actually dig it out yourself. I've spent years and years looking at this stuff. Again, I don't know it all, but it's a very good question. Manipulation. Which are the methods that could be used to manipulate silver prices? Well, the basic premise of all activity in any market, be it the silver market, be it the stock market, bond market, whatever happens, even the real estate market, happens to be amount of buying pressure or selling pressure that exists. When there's more buying pressure of a commodity or a stock, or the housing market goes up, and when there's more selling pressure, the price goes down. And that's just common sense. If you have a great deal of whatever, or even if you don't have that much, but there's no demand for it. If you have a car and you want to sell it, and no one likes that kind of model. They don't like that model. They don't like that year. You're going to have to discount, and drive the price down until you finally find a buyer. Same thing in the market. Now, the reason that it can be done is because all of these markets are so highly leveraged. They're all considered commodities. And the commodities or futures markets have vast amounts of leverage to them. So a little bit of buying can move the price much higher than just cash buying would do, and a little bit of selling can move the price much higher than cash selling would do. I hope that's clear. I'm trying to give a basic here. So the reason you can manipulate the price is you can come in and make massive buying with a small amount of cash relatively to what the bought and paid for cash settlement price would be, and the same thing on the sell side. So a lot of these entities make their money selling and buying. They move both directions. They're on either side of the market they want to be on to drive the price wherever they want to drive it in relative terms. I want to be clear here that I do not believe that you can manipulate the overall trend. The overall trend for gold and silver has been up, and I believe it continues to be up, and I believe that the continuation of that trend will be here shortly. How are people able to manipulate the price of silver? By selling massive amounts of silver on paper that doesn't exist. Who are these people? They are the Working Group on Financial Markets. Type it into Google, the Working Group on Financial Markets. You'll find out it's the president, it's the head of the Securities Exchange Commission, it's the head of the Treasury. In other words, it's the elites. The elites of the elites are the financial Working Group on Financial Markets. They have at law and in public domain knowledge. You can verify this as the truth, have the ability to manipulate any market they care to. Now, I don't think they use the word manipulate, but they can go in and move these markets around. That's who does it for the most part. Yes, there are banks. Yes, there are hedge funds. Yes, there are others. But when you really get into the big market, which is the bond market, primarily the bond market is manipulated by the Working Group on Financial Markets. The bond market, of course, is the largest market in the world. Why is it? Because it's the debt market. There's more debt in the planet than we can absorb. We're over-indebted as a planet. How long can the Fed bankers continue to manipulate and hold off the run-up of gold and silver? Peter, I wish I knew. I don't think it's too much longer, meaning a couple years at the most, but I could be wrong there. And I think what you could see is what we already have witnessed. So history is a great teacher. And what we saw in the financial panic of 2008 was 2 silver prices and 2 gold prices. The honest-to-God gold and silver price where you had to put down X amount of cash to buy it, and the futures price, which is substantially less than the real price. So I think you'll see that again. You'll start seeing these discrepancies where you call it the gold dealer, and gold's at, for an example, $2,500 an ounce, but the futures price is $2,425. Or, well, let me give a better example. It's $2,500 an ounce, and gold is at $2,100 an ounce. So why the $400 spread? I mean, your normal markup's 4%. It's because, well, I don't know what the futures market's doing. All I know is that's what I'm going to accept. And I think you'll see that manifest as probably a good indicator, but time will tell. I'm not, certain how to unwind. Again, it will, and when is very tough to state. Asset allocation, what to own. I'm an Irish Morgan Report subscriber. I highly recommend it. What % physical do you recommend I hold as a core investment if I was to take profit over the next move to say 48 per ounce? What time this year do you expect to see the price reach? Okay. First of all, as a Morgan Report subscriber, there is a section called How to Use the Morgan Report. In that, How to Use the Morgan Report, which everyone should read when they first subscribe, and very few do, I give a few examples of what allocation you would have. So, in other words, I'm a precious metals investor. I'm this old. I have this kind of net worth. And I give some hypotheticals. I give a couple of examples. And my goals are X, and here would be the recommendation. It'd be this much in physical, this much in top-tier stocks, this much in the mid-tier stocks we recommend, and this much in the speculative section that we recommend. You don't want to, you're this age and you are not interested in trading, so, get the basic service and continue on. So there's some recommendations there, but I will answer it in a general way, what's basically already written in for our paid members only, which means you'll get a better answer than I'm about to give you off the cuff. Every time I do this, you got to realize that I can't speak in the amount of time allotted, what it's taken me, a long time to write out in a PDF file. But basically, it's your age is the main consideration. Your net worth is somewhat of a consideration, and your goals, of course, are a consideration as well. But generally speaking, the physical amount you have should go up with age. In other words, you should have probably more leverage in the market, which means mining shares in your 30s and 40s than you would in your 70s and 80s. And the reason being is that you have a chance to make it back when you're younger that you don't have when you're older. So you have to be more conservative. There's nothing more conservative in the world than owning physical precious metals. It is the most conservative money that exists. The reason being is it's been money for over 5,000 years and will continue to be money no matter what any government anywhere says. That's what it is. That's what it's always been, and that's what it, in my view, always will be. So if you're worried about, the stock market or the housing market or whatever is going on, certainly you're entitled to your opinions on anything. But the fact is that if you're really a conservative person, you want conservative money, money that stands the test of time. That does not mean the price doesn't fluctuate. But think about that for a minute as well. If you had 10 ounces at the beginning of the year 2000, you have 100 ounces now, you're by definition, you're really by definition 10 times richer. And the reason is you have 10 times more ounces of silver. Now the price will be different. And that's what everyone concerns themselves with because the price fluctuates. And this is part of the game in a way because it gets you to think, oh my God, if I had to sell now. Now, I understand there are people that have to sell. I understand that there are people that take more leverage than they should. I understand all these things. I've been there. But nonetheless, if you really can get away from their paradigm and move into your paradigm and start thinking, all I want to do is accumulate ounces, I'm not concerned about the price. Because when are you going to sell? If you do it right and you do what you can afford and you do it over time, you're going to sell when you want to sell or when it's highly overvalued. Or you have a goal to pay off your house cash or send your daughter to college or buy that new car or start that business or donate it and start a charity or start a foundation. I don't know. I mean, I'm pro-people. I'm for you doing what you want to do with your money. But nonetheless, that's the idea. So moving on to the next question. What would be the smartest approach into investing in silver as a beginner? Unfortunately, you don't have the program Silver Saver or silver123.net. That's only available for Canadians and Americans to invest in. But I would say, if you're not on the free part of the website, which you just go to silver-investor.com and go to the bottom and sign up for the free e-reports, which come out every week. I have to pay for them. It's my time, and that's fine. I don't mind doing it. It's a public service. You'll get the 10 rules of silver investing. And in the 10 rules of silver investing, it tells you how to approach the market, especially as a beginner. So my approach would definitely be to dollar cost average. Don't try to pick a bottom, especially if you're new. Just take an attitude of you want to accumulate over time. I don't think it's too late at all. I think, in fact, this is a good entry point. If you missed it at 5, 10, 15, and 20, I think you're fine to start buying under 30. And if I'm wrong and it goes below the 26 level and you've decided you're going to put in, 10,000, and you spread that out over 6 months or even better a year. If it got there, you would just buy your amount that you've allocated and continue on. So it's a great approach to a market. Plus, it takes a lot of the emotion out. I will be receiving a substantial amount of capital in May on this year, and I was going to buy a new car, but I'm thinking about investing around 90% of these funds into silver. Is this a good idea, and if so, why? Well, these are individual questions. I mean, if you're doing a consultation with me on the phone on that question, what I would say is, what means the most to you? I mean, there's more to life than money. And if the new car is something that you really, really want, and it's something that's going to bring you so much joy, I don't have a joy meter that I can put on you and measure your enjoyment. I mean, if that's something that was just, this is the greatest thing that it's ever happened to me. I just turned 60. I've only had a few new cars in my life. I happen to have a new diesel Volkswagen, one of the highest rated, I think, environmental-wise. I love it. It's turbocharged. It does a nice job. It gets great mileage. But, cars to me are transportation. I obviously bought one that I thought would probably be the last car I ever need. Diesels go forever. But to me, the newness of something usually wears off fairly quickly, but, I may be much older than you. So I don't know the answer. You really have to ask, especially if you put in most of these funds in the silver and it sits there for another 6 months or a year. And, gee, you got a year you could have driven this new car. So I really couldn't answer that for you. I just hopefully gave you some ideas to consider. And, Michael, is that the end of the questions?
Well, David, if I may, can I just draw your attention to these 3 questions?
Absolutely. Thank you for bringing that to my attention. This is one that's a very touchy subject. First of all, I will give you my opinion. What I'm going to say is opinion only. There are other opinions on my website because I am free market and I value all opinions because opinions are valid, but facts are Trump opinions, but we don't know because we don't know the future. I live in the UK, most of it will be confiscated. I highly doubt it. First of all, to confiscate silver would be very difficult because what do you confiscate? Only the monetary silver? Do you confiscate the silverware? Do you confiscate the silver? How about all of the reflective surfaces and all the skyscrapers around the United Kingdom, particularly in London? I just don't see it, but again, that's my opinion, and it's a strong one. If you look at, again, Charles Savoy's work in our archive section of the website, he has a different opinion. He feels that it will be. I don't. I really don't see it. Second question, what are your prospective thoughts on the chances of silver gold confiscation in the USA? Again, I don't see it, but I do see it possibly being highly taxed. I believe between the two metals that gold would have a higher chance of being confiscated, although I doubt it will be confiscated. The reason being is that central banks still hold gold. They still, whether they admit it or not, gold is a monetary asset to a central bank. It is, and it's that way to the Federal Reserve as well. So because of that fact, the chances, if there were to be a confiscation, I think it would be far more likely to be gold than silver. But again, they would be admitting that gold is money when they've been, preaching forever that gold isn't money. Even Bernanke said it was tradition. It wasn't money. When Ron Paul asked him, is gold money, he said, no, it's not. It's a tradition. Well, it's money. But he don't want to admit it or really thinks it's just a tradition. So again, I doubt it. It's possible. I don't worry too much about it. If you are worried about it, then you need to either keep it in a jurisdiction that is safe from that, which my friends here at GoldCore will be explaining later in this presentation, so that's a consideration. What I teach is basically it depends on your wealth. I mean, if you're, you've got, and this is the idea, I do not judge people by how much money they have. I'm far better than that, so are you. But nonetheless, if you have a higher asset base, then you should consider owning it in probably 3 different jurisdictions. If you're of modest means and your savings are more modest, then having it in one jurisdiction is probably all you can do, and then just, take your luck where you're at or whatever. So hopefully I'm addressing that. So the last question, what are your views on confiscation of gold and silver in the United States becoming collapse of the dollar? Really already addressed that. The government is not all powerful. They would like you to believe that. They'd like you to believe that the rights come from them and not from our creator. They would like you to believe a lot of things. But history has shown time and time again that the people really have the power, and that even though they might edict this and edict that, I'll go back to the gold confiscation in the 30s, which is considered to be a nationalization. You were paid for your gold. It's just after the gold was collected that they changed the price. So it'd be like buying a car from you and then all of a sudden up in a price by a substantial amount. John Exter, who was a New York Fed banker, big gold bug, said, and he's long gone, but you can look up John Exter in Google and maybe read this, I'm not sure. He said a lot of people did not turn in their gold during the 30s. They basically took it, stuck it in the coffee can, buried it outside their kitchen window where they could watch it while the women were doing the dishes, which there weren't dishwashers those days, and the women, not degrading the women, it's just the time and place and condition that they spent a lot of time. So a lot of people didn't turn it in. I'm not suggesting you do or you don't. I'm suggesting that I doubt it would happen, and even if it does, then you have to make a decision what's best for you. Big Brother is watching us all in this current climate, and this is the time for people to really find their mettle, M-E-T-T-L-E, and determine what's valuable to them. To me, liberty is more valuable than any amount of precious metals, because if we lose our freedom, then it doesn't matter how much gold you've got. And I think I'll wrap it up with that statement.
David, thank you very, very much. I'm just going to scoot forward. I want to thank you. wow, we covered a lot of ground. I want to ask you once more, just repeat the URL. Is it mises.org?
Yes, MISES.org.
MISES.org. Okay, I do think that a number of our listeners will find that a very valuable resource. Well, David, listen, thanks a million. I know that we're going to get positive feedback, as we always do when we have a webinar with yourself. You're a very informed visitor on this webinar, and I'd like to thank you for your time.
My pleasure. Thank you.
Okay. So, moving along, I'm delighted to introduce my colleague Mark Byrne, and I'm going to hand over controls now to Mark for him to begin his presentation. Okay, Mark.
Thank you, Michael. And thank you, David, for an excellent question and answer session. You were as informative and entertaining as ever. We first came across David's research on silver in the early 2000s, and he was one of the few people who really had a handle on the silver market at the time, and he helped to educate us about the silver market and how silver could help to protect and grow our clients' wealth in the coming years. We were inundated with questions from clients and subscribers once we announced the webinar with David, and we basically are trying to address all your questions, but we had so many questions that came in that unfortunately we had to be quite selective in what we answered. But we'll do our very best to answer them all, and in the coming days we will be publishing a guide to owning silver, a very comprehensive guide to owning silver, which will answer all your questions regarding bullion coins, bars, and indeed storage, as I said, in a very comprehensive way. So, yeah, the people tend to always, the first question comes to people's mind is price, and obviously it is an important consideration. But as David said, what's more important about silver and gold is their value, and their value is as safe haven assets and as assets that protect people from, particularly against inflation, but also from systemic risk. But I suppose if we're going to deal with price, we should obviously look at price briefly, and since 2003 we have said that silver would reach the inflation-adjusted high of over $130 per ounce. That is ordinarily the way in all bull markets, that a price of an asset class tends to surpass the inflation-adjusted high. Sometimes it goes to multiples of the previous inflation-adjusted high. So as we can see in the chart here, silver's inflation-adjusted high is $130 per ounce. This chart is actually just a little bit out of date. And people looking at this chart would say, oh, well, that was a brief sort of anomaly. It was a blow-off high. It was a bubble. It was the Hunt Brothers corner in the marketplace. And I think this here would make people quite nervous. But I think many analysts today, including David and ourselves and many others, believe that the prices are going to go much higher in the coming years, and then when they fall, they're unlikely to fall in the manner that we've seen in the 1980s. If you look at this chart, during this period, silver was actually money throughout the period. Even as recently as the 1960s, the silver coinage, which we're going to talk about later on, 90% silver bags, were basically US silver coinage was silver. So every nickel, dime, and quarter were 90% pure silver up until 1965. Then the currency was debased, and they went to 40% silver from 65 to 79. And then, as we know, in 1971, Tricky Dicky, President Richard Milhouse Nixon, went off the gold standard in this period here. In that year, 1971, silver prices were trading as low as $150 per ounce. This is an inflation-adjusted high, so it doesn't actually show you the actual low, but the low of silver was around $1.50. In the next 9 years, silver prices increased 33 times to over $50 per ounce, which again, adjusted for inflation, is $130 per ounce. We believe that we are still, so basically this is when Nixon went off the gold standard and we went to a fiat monetary system. We're still on a fiat monetary system. And today, the amount of money that's been created in the world is of a multiple, a huge multiple over the levels of money that are in the world in 1980. And another consideration was the gold and silver bubbles in 1980, they were burst. There was a number of reasons, but the primary reason was a sharp increase in interest rates by the Federal Reserve and Paul Volcker, who took interest rates well above 15% when inflation was above 10%. And it was these positive real interest rates that led to this collapse in the silver price. Today we have negative real interest rates, and for this reason we believe it's quite possible that we again see a similar performance in silver that we'll see in the 1970s, and silver could indeed rise potentially 33 times again and mirror the performance that we'll see in the 1970s. If the average silver price in 2001 was $4.37 per ounce, that would lead to silver prices of about $140 per ounce. Another primary driving or a primary factor regards the silver price is the gold-silver ratio. Throughout history, the gold-silver ratio has been 15 to 1, so you can buy 15 ounces of silver with 1 ounce of gold. And that was seen back in Babylonian times, in Greco-Roman times, through into medieval times, into Elizabethan England, and indeed in the Industrial Revolution. This chart here is a more modern chart that shows the trend since 1990. As we can see, the trend is very clearly down. But this chart, it doesn't show you the ratio back in much of even the 20th century when the ratio was 15 to 1. So it was well below this level here. And that 15 to 1 ratio throughout the world, throughout history, is due to the fact that there are 15 parts of silver to every 1 part of gold in the Earth's crust. So geologically, there are 15 parts of silver to every 1 part of gold. And while all the gold in the world that's ever been mined is continually recycled and comes back into the system due to the much higher price of gold, silver is in use in industrial productions, and a huge amount of silver has actually been used up in industrial production since the dawn of the industrial age in the 19th century. Today, people will be amazed, as David alluded to it, but people will be amazed. There's little filaments of silver in iPads and iPhones in your desks and all sorts of electronic applications. And that silver, it's like oil. When it's used up, there's tiny little filaments of silver. Most of that silver will not come back into the marketplace unless we get drastically higher prices in the coming years. So, yeah, today at nearly $1,600 per ounce and $29 per ounce for silver. I'm sorry, should I say $1,600 per ounce for gold? We're at roughly 55 to 1. But long term, the trend, as you can see, is down, and we do believe that 15 to 1 should be reached in the coming years. Hardcore, raging silver bugs actually don't like the term bug. I think it's pejorative. But silver enthusiasts, should we call them, are raging silver bugs actually talk about a ratio of 1 to 1 because of the amount of silver that's been used up in industrial applications. We wouldn't be quite that bullish, but we would be very bullish. I think 15 to 1 is more than achievable. When we talk about price, it's very important to realize that the price of silver and the price of gold per se are not increasing. What's really happening is that the paper currencies, all the fiat currencies that we use today in our various countries, are being devalued and debased as central bankers print and electronically create billions and trillions of dollars, pounds, euros, and yen. And this table here clearly shows that. So it shows the silver price since 2003 in a range of different fiat currencies, and we can see that silver has increased 24% per annum in dollar terms, 23.4% in sterling terms, and 22.3% in euro terms. One of the most important factors with regard to prices are interest rates, and we believe that further price gains are almost certain as long as negative real interest rates continue. And I think it's clear that negative real interest rates are here to stay for at least the foreseeable future. So on to our questions. The first question is from Kelly in USA, and she asks, which is better, bars or coins? Well, neither is better per se. It very much depends on your motive for buying silver, your outlook, and how much silver you're buying. If you're very concerned about the risk of a systemic crisis and or currency crisis in the US and there's a risk of currency crisis throughout the world now, given the unfortunate history of paper currencies, you should be concerned about these risks. Then it is very hard to beat silver bullion coins, silver eagles, and silver maple leafs, or indeed 90% bags. I am a great believer in not having all your eggs in one basket, and I own all of the above and 1,000-ounce bars in allocated storage in Zurich. Wealthier and high net worth clients tend to favor 1,000-ounce silver bars and allocated storage due to their lower premiums. We are currently selling 1,000-ounce silver bars at around, I think, around 3% premium over spot. That's just for a single 1,000-ounce bar, and we would obviously have much lower premiums on larger orders. Some clients choose to store most of their silver in allocated accounts in the Perth Mints or in personal allocated accounts in Weimat and Zurich. But they often choose to take delivery of some eagles, some maple leafs, and indeed 9% bags, or a 9% bag or two occasionally. Obviously, you should feel very secure in your own home or office prior to taking delivery of any silver bullion. Next question is regarding, again, so it's the best kind of silver, hedging against inflation and market instability, and then private mint US Treasury silver. Yeah, well, we believe that both silver bullion coins, such as eagles, maples, and 9% bags, and indeed 1,000-ounce silver bars are probably the best way to own silver bullion. Take delivery of some and store the rest very securely. We prefer official silver or legal tender silver, as these coins are more well known and therefore they're more popular and they're more liquid. Silver rounds are not traded on international markets, and many dealers will not make a market and will not automatically buy back silver rounds, nor will they buy back privately minted bars, non-COMEX bars from private mints. So this makes them more risky and therefore less attractive than more well-known, popular and liquid legal tender coins and large COMEX bars. Next question is regarding dealers, whether they'll buy back if the price skyrockets, and a recommendation regarding liquidating silver. Yeah, well, there's a few dealers like yourselves who, in the US and in Europe, who make a market in major bullion products, and they will buy your coins and bars even if the price skyrockets. It's important to have a good relationship with your bullion dealer. It's no harm having a relation with a bullion dealer both in your own jurisdiction but also having one internationally. There are advantages to dealing with international entities in terms of reporting requirements. It's important that you know your bullion dealer, that you trust your bullion dealer, and that you know that they have your interests at heart. Knowing the principles of the company, or at least senior members of staff, is also advantageous, and having relationships like that. With regard to liquidating silver at the right time, as David said, I think it's a fundamental point that needs to be understood by people. It is highly imprudent to try and time an exact bottom, but especially an exact top, because there's so many factors driving this marketplace, and it's very few, if any, people would call it exactly right. I mean, a tiny handful of people, and so it's important that people are prudent, and they basically need to plan to sell a percentage of their silver holdings when it reaches key levels. So you have to decide at, say, $50 per ounce, $80 per ounce, $100 per ounce, $150 per ounce. I mean, I just give those figures. They're sort of your big round figures. Sorry, forget about 80, but say 50, 100, 150, and the inflation is just at high, the nominal high. These are sort of key figures, and I think you could potentially take profits at levels like that. And in the same way that it's prudent to dollar cost average into silver, it would be prudent to dollar cost average out of silver by gradually selling over a period of weeks when we get into the overvalued stage, and that's when we're in the mania stage, when silver is covered in the media. Today silver is rarely if ever covered in the mainstream media. Gold is barely covered, silver is never covered. So it's only when it begins to be covered and when the man on the street starts to buy. Today it's still a fringe investment of more, I suppose, more people who understand, I suppose, economics and finance and monetary history are the people who are more risk averse, who are the people who are buying gold and silver today. Gold has gradually moved in slightly into the mainstream, but it's still on the fringes. So yeah, in terms of selling, the world, as we know, it's unfortunately been turned into a casino, and there's a huge volatility in all markets. We get bouts of lack of volatility, as we've seen recently, and then we get huge spikes in volatility, and we will see that volatility in currency markets and in the gold and silver markets in the coming months and years. It's going to be very, very high, and which will make it difficult for people, it will scare weak hands out of the marketplace, as David said, and it's very important in that regard that you think about selling over a gradual period of time, as I said, but also it's important to have silver in storage so that you can pick up the phone at key moments and you can sell when you want to, and this will be an important consideration, and it will be advantageous. Regarding silver squeeze, eagles, maples, financial storm, and precious metals in different countries. If there's going to be a silver squeeze of silver coins, and I suppose it is possible given the very small size of the market, then yeah, it could well affect both eagles and maples. The premiums are still quite competitive despite a slight increase recently. In volume, we offer both coins at premiums of below 10% spot, but the premiums have increased just a small bit recently, which bears keeping an eye on. In the early 2000s, the premiums of silver bullion coins were as high as 25%, and some dealers were charging 40% over spot. Today, 9% bags of volume have premiums of just 9%. So I suppose given the small size of the silver bullion market, it remains a tiny market, especially vis-a-vis 1979, 1980. There was only a handful of billionaires in the world in 1980. Today there are dozens of billionaires. Today there are hundreds of millionaires. There are sovereign wealth funds, there are hedge funds. There's a huge amount of more money in the world vis-a-vis silver, and therefore that could pressurize premiums higher in the coming months and years. Interestingly, in just recent days, there has been a degree of tightness in the silver bullion market. Maple leaf buyers who wish to buy in volume have to wait 2 weeks. There's a delay of a week to 10 days for COMEX 100-ounce bars, and there's also a delay of a few days for 1,000-ounce bars in volume. The only part of the market not experiencing delays are 1-ounce Austrian Philharmonics and 40% silver bags and privately minted silver bars. Your second part of your question about different countries, yeah, I mean, we all have geographic or national risks today. Our homes, our families, our businesses, our careers, and many of our assets, they tend to be in one country, for most of us anyway. Therefore, it makes sense to lessen that risk by holding some of your wealth in another jurisdiction. And silver and gold are obviously ideal in this regard due to their portable nature. And that leads to possibly the most important question, which is where to store your silver bullion. And this question is about the SLV, the SLV ETF, and the 200-day moving average. Yeah, we've long said buying below the 200-day moving average and dollar, pound, or euro cost averaging into positions remains prudent, Brendan, and we continue to advocate that. With regard to SLV, like many ETFs, it's a wonderful trading vehicle, and we think it's great for speculators. But in fact, you are an unsecured creditor of the custodian, who in the SLV's case is JP Morgan. The prospectus, and we've read through the prospectus of all these ETFs and done research on them, the prospectus show that JP Morgan are indemnified in a very significant way from an array of different risks, meaning that when you buy SLV, you do not own the underlying physical asset, so it somewhat defeats the whole purpose of owning silver. What you actually own is a riskier paper representation, and if you believe in systemic risk and currency risk, which you very much should, the SLV is probably not the best way to own silver. Next question is regarding VAT on silver coins, which is the bane of buyers in Europe, unfortunately, and bullion vault. So Yeah, I personally believe that it is worth taking the hit of 20% VAT in the UK and in other European jurisdictions. But that's because I see silver coins as financial insurance and not as an investment per se. In the event of a currency crisis or currency devaluations, silver will soar in value, or not silver will soar in value, the paper currencies will devalue versus gold and silver, and then that 20% VAT will be seen in perspective. It will be inconsequential. I think it's important to keep that perspective there. The rates in many jurisdictions they're very high, and so that's an important reason not to take possession of all of one's silver. As is the weight and bulk and the difficulty of storing large volumes of silver, and indeed the cost of taking delivery, and this makes silver in particular it's more attractive to be storing silver and to store silver offshore. So storing silver offshore with the option of taking delivery is very important when one wishes to take delivery, and that is an important option that you should have. With respect to bullion vaults, yeah, I mean, we do have a lot of respect for bullion vaults. Since they came into the marketplace in 2005, they've made great strides, and they've democratized the gold and silver marketplace. But we do think there are underappreciated risks with regard to owning gold and silver with bullion vaults. One is the absolute dependence on technology and a website, servers, and an entire infrastructure. In the event of hacking, in the event of cyber war, in the event of problems accessing the internet, clients might not be able to transact for a period of time. And there's also the underappreciated risk with regard to whether bullion vault can guarantee a fair market buy and sell price on their website due to the closed loop nature of their marketplace. Next question is, where can I safely hold physical silver once I bought it? Corrado, so yeah, allocated accounts are possibly the safest way for investors to own silver bullion coins and bars, providing the allocated account is with a safe and trusted counterparty. Concerns about the solvency of banks internationally, and indeed concerns about the financial system, have resulted in allocated accounts with specialist secure storage and depository companies becoming more popular in recent years, and we've seen that to quite a significant degree in recent months. We offer allocated accounts, as Michael said at the top, with major depositories in the US, with Perth Mint, and with Viamat. The accounts in the tax-free zone Zurich Airport are probably the safest place in the world to store gold. That's due to both Viamat's safety and also due to Switzerland's safety, due to its, I was going to say very stable economy, but relative to most economies in the world, the Swiss, it is far more stable than most economies, and that will be seen as such in the coming months and years. And they also have a healthy respect for property rights, which is very important, and indeed for bullion ownership throughout their history. Finally, we're running low on time here, so I'm going to have to go quickly in terms of asset allocation. We've always recommended 5 to 10% in gold and the same in silver. However, given the risks that are out there today, I think higher allocations are merited. Mark Faber said last week on CNBC, I think he said this in recent months as well, that he has a 25% allocation to gold. And who am I to argue with Dr. Bloom, Boom, and Bloom? If one is extremely bearish on the future of paper currencies, as I'm sure many of us on this webinar are, then you could go higher. And in terms of the gold-silver ratio in the portfolio, we've always said 50-50 is a good way to go in terms of the gold-silver allocation. Right now, silver remains very undervalued versus gold, and I think you could easily go 75% silver, 25% gold, and then rebalance when silver outperforms, as we believe it is likely to do. So, unfortunately, the clock is against us, and I have to wrap up. I really enjoyed David's answers, and particularly his answer regarding buying a new car or owning silver and the joyometer. I hope we briefly got a spike on all your joyometers today on the webinar, and I thank you all for joining us from around the world today. It's great to see so many people on the webinar, and I hope you were informed by our presentations. Thank you very much.
Thanks, Mark. Another excellent session with timely advice to help our listeners make informed decisions about their allocations in silver. Well, that's all we have time for, folks. Thank you for taking the time to join GoldCore today. I sincerely hope this was a useful and informative session. It was recorded, and I'll send you a link to the recording. If you have any other questions, please don't hesitate to contact either myself, Michael O'Brien, at michael.o'brien@goldcore.com, or Mark O'Byrne at mark.o'byrne@goldcore.com. Or you can follow us on Twitter at GoldCore, or indeed you can also follow Dave Morgan on Twitter at SilverGuru22. So thank you again, and we look forward to seeing you at our next webinar.